Hello, this is Colin Cattell, host of Palisade Radio, here to tell you about an amazing event taking place from February 15th until the 19th. Palisade Global Investments is teaming up with the Real Asset Investor team and one of the largest real estate developers on the island of Ambergris Caye, Belize to throw an amazing 4-day event. We're gathering an exclusive group of 25 accredited individuals to network, learn new ideas from experts, all while staying at Ambergris Caye, Belize's newest resort, Mahogany Bay Village by Hilton. The conference is taking place from Wednesday, February 15th until Sunday, February 19th. Indulge in your prosperous future at Ambergris' newest resort for only $997 plus airfare. Accommodations, food, and drinks are included. Only a few spots remain. If you're interested, send me an email at colin@palisadeglobal.com. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. February 15th to the 19th is going to be an exceptional event, and we're essentially fully booked for our Palisade Hard Asset Investor Conference on the island of Ambergris Caye, Belize. If you'd like to join us, email me directly at colin@palisadeglobal.com. Today we're bringing back David Cates, who will be our keynote speaker at the event to discuss all things uranium. David, welcome back to the program.
Yeah, Colin, thanks very much for having me.
Yeah, I'm sure happy that we booked you for the event in bear market timing, because I know your time just went from limited to very, very limited. You've got a very busy schedule today, so thanks for coming on the program. And last time we had you on, which was 3 weeks ago, the market's certainly changed since then. Since then, Denison Mines, the company you are CEO of, is up 50%. Uranium participation, a proxy for the price of uranium, is up 13%. I want to ask you what kind of investors you're seeing these inflows coming from into the space.
Yeah, Colin, you're absolutely right about inflows. There's a huge amount of interest that's picked up this week, and it was really warming up in December as we saw the uranium spot price start to move upwards. But this week, with the announcement out of KazAtomProm that they'd be cutting 10% of their production in 2017, it's just filled our week. We were marketing this week anyways, and we haven't been able to basically fit anyone in the whole week, as we've shoehorned meetings into every 30-minute slot that we've got. But it's a much broader group of investors than we would have seen over the last year. We market constantly. I mean, that's my job, and we have to be out there talking to investors. And for a company like Denison and UPC, where we're marketing companies that combined would have market caps, towards $1 billion range, and yet even in the market that we were in the fall, difficult to get the doors open. Difficult to get in front of people because there was really an apathy towards uranium. The people we're meeting were often long-time uranium investors, really just wanting to understand where the market was at. And the bulk of broader resource investors and definitely generalist investors were staying away. This news this week has really opened the door and opened the eyes of a lot of investors that are more generalist nature, saying, look, I've seen the money that can be made in the uranium space. I was in it maybe in 06, 07. This seems like the kind of true capitulation event when the world's largest producer announces a production cutback. I want to get these guys in front of me, and let's talk about what's going on in the space, and that's what's been going on this week. Just unbelievable interest in the space from really all sides.
David, how do you measure the importance of the Kazakhstan cutback of 10% production? I've seen some people draw a comparison to what would happen if one of the largest oil-producing countries in the world cut their production back by 10%. How much does that cut actually mean globally, and what could it do to the price of uranium?
Right. So, I'm following all the analyst reports on this, and a lot of people are throwing out numbers that don't make it seem particularly dramatic, but like it. I'm looking at it in a realistic way here. They're talking about 5 million pounds effectively not going into the market that otherwise would have gone into the market. If you look at that in the giant picture of all contracts, and that's what some of the analysts have done. They're saying, well, this is low single digit part of the total uranium supply side, but you can't look at it that way, right? Because so much of that is contracting volumes that's being sold at much higher price than the spot price anyways. And the Kazakhs, they're a typical spot player, so they're not selling their pounds into contracts, and those aren't the pounds that they're going to take off the table. They're selling into the spot market. Well, how big is the spot market? The spot market is, say, 40, 50 million pounds a year. So if you're taking 5 million pounds out of that there is a 10% cut. It's not just a 10% cut in KazAtomProm's production. It ends up being something like a 10% cut in pounds that would go into the spot market. So that's hugely significant. That makes a really solid dent at what we would call the oversupply in the spot market right now. And more important than any of that is really the Kazakhs coming out and showing that they're prepared to look at this market with a degree of sophistication and a commercial slant to the way they're going to approach their business that they haven't used in the past. And Scott Melby, who's our VP Commercial for Uranium Participation Corp, also a special advisor to the CEO of KazAtomProm. I think that's what he has been working on over there is helping to bring a commercial mindset to the Kazakhs, and really, Colin, that's why I say it's much bigger than the 5 million pounds, because is this the first step in KazAtomProm, the world's leader in producing uranium, now acting in much more of a commercial way rather than a sovereign, nationalized uranium producer way. And to me, where that goes, I don't want to be overly promotional on it, but where that goes is really limitless, because we've seen how a Cameco operates in the market in a responsible way and has a contract book where they're doing most of their sales at much higher prices, and they're able to use the trading arm to navigate through the market as things go up and down. If KazAtomProm can get to a place like that, then think of how a market that is thin and sometimes irrational could become much more rational. So that's what I'm most excited about. Not just the pounds. I mean, the pounds are definitely a great start, though.
Sticking on the Kazakhstan cuts, going back a couple of years, you had Kazakhstan upping production at a time that certainly hurt the spot price when the spot price was already heading in the downward direction. And one could speculate the reason they did that was to shut down competitors' production to drive the cost of production, the spot price down so low that nobody else could make money. And now they're turning the spigot back on when they know that they've done enough damage. Is that playing into the decision here at all, or are they simply acting in a more commercial manner all of a sudden, as you've pointed out?
Yeah, I mean, it's hard to know how things evolve. I mean, I think they've been very successful at developing their mines, and so the fact that they were able to ramp up production and really cause a bit of a disturbance to the market in doing so isn't necessarily indicative of a plan around disrupting the market as much as it was, I think, perhaps operational success. And what we're seeing now, it really doesn't matter how they got to that point. What we're seeing now is just a bit of a more rational view of maybe our pounds are worth more in the ground at these prices. They have long lives on a lot of their projects, but selling at $18, $20, even for the lowest cost producer in the world, I really just don't see that as being attractive when you use a rational lens, and I think that's what we're seeing with this decision.
There will always be doubters when a market starts to move up. I've had a listener message me yesterday that he thinks this uranium move is just a dead cat bounce. But the moves we've had have certainly been quite significant. I pointed out the performance of the stocks that you're running and are involved in. If you go to some of the juniors, of course, we've seen some companies up 100 or 150%. This is really the kind of move that shows up on a long-term chart and seems significant. How would you refute the fact that this might not be a real move?
Yeah, no, I agree. I mean, that's a question that's going to come up as soon as you have 2-3 days of 10% plus gains and you got stocks doubling. There's always going to be someone who's on the other side of that saying, "Well, I don't think it's sustainable." Is this a move that goes straight to the moon? I don't think it is. I think the gains we've seen over the last few days, I think a lot of those gains are going to be real. I think the market was truly oversold. There was total apathy in the space. Are we going to see a correction, on some of these stocks and some profit taking? Absolutely, we will. But what I've seen in the stocks, and I'll speak for Denison just in the last few days, 10 million shares traded Denison yesterday. that's not dead cat bounce type volume, right? That's real money that wasn't in the space coming into the space. 10 million shares in a day. I mean, we have very good volumes to begin with, trading, in the million shares a day range. But 10 million is a notable increase. So I do think there's a real shift going on here. And I think what I'd point to also is, the uranium price it's up on this news, but it's still in the mid to low 20s. So there's a long runway ahead, and everyone's seeing that. There's no mystery that that's what the price is, right? So there's a long runway ahead potentially before we even get into remotely rational prices. At $23, I mean, we talked about this on our last chat. At $23, you maybe have 1-2 projects in the world that can make money on an all-in basis. That doesn't make a market work, right? So there's a lot of runway left to this story. Again, I'm a conservative guy. I don't know that it just keeps going up 10% every day for 2 weeks or anything like that. I think it'll find its place. But with the volumes I'm seeing, I really see it as something that is meaningful. There's a lot of money that's buying these equities up, and I don't see them selling right away. I mean, so take Denison, we're trading over $1. Somebody's just paid over $1 for that stock, and they've taken a large position. They're not going to be out there selling that position down for the share price to come off.
There's a lot of money rushing into these stocks, as you just pointed out. There's also been a great deal of financing that's gone on since this low took place in December. I'm pointing to a lot of junior companies that, after suffering through 5 years of bear market conditions, are using this as an opportunity to bring in some much needed cash. And my question for you, David, is what kind of ramifications are we going to see 4 to 6 months from now? I remember last year, January and February, when precious metals started to uptick, you had hundreds of companies go to market, and there was definitely a noticeable selling effect that came into place 4 to 6 months after that, when that paper freed up. Do you foresee that potentially happening here in the uranium space?
Well, I do think a lot of the companies need capital. They've been through a very long bear market, and if this is the beginning of a 2004 type year in the cycle that led up to 2006, 2007, I do think you're going to have a lot of companies that are looking to take advantage of some optimism here and raise capital. I think that the difference might be that the uranium cycle itself is not short. 2004 and 2005 had to happen before 2006 and 2007. So if people are really believing the fundamentals that underpin this market, and a decision like KazAtomProm's as an indicator of those fundamentals starting to come to roost, then I do think there's going to be less pressure from investors to be selling if there is a round of financing in the next few months, and then investors looking to sell at the back end of that. I think they're going to be less inclined to do that because this is really the beginning of something. We are definitely not at the height. We've bounced off a very low, but there's a lot of room to go, and you can look at almost every one of the uranium companies to see where they traded leading up to 06 and 07 and where they went to in 06, 07. That's what people love about this space, and so I think there's could be guys who sell off after financings, but really I think the people who are in on those financings are looking to be there for the multiple bag returns that they're going to have when the market actually comes together the way it might in the next 2 to 3 years.
Let's end with one final question. I know you've got a tight schedule today. What type of events, decisions, movements do you want to see over the next couple of months to really convince you of the case that the bottom is not only in, but a momentum upwards going to continue? Obviously, that news out of Kazakhstan last week was some of the best news that we could have hoped for. Do you foresee other things like that hitting the market in the form of news?
Yeah, I think there's two things that need to happen. And both of these things we would hope would show up in a spot price increase, but and a long-term price increase. But there's two things fundamentally. One, we'd like to see utilities start to actually come into the market, the term market, the spot market, in a more meaningful way. They have uncovered requirements. They really should be looking at contracting, particularly at low prices, which is where we're at right now. So I'd like to see volumes come back. We saw that in December. That's where we saw the uranium price start to move, because we had multiple utilities looking at taking material. So I'd like to see that continue. And the second thing is you could see extra or further production cutbacks, particularly as some of the producers have long-term contracts come off that are priced much higher. There are definitely a few projects out there where if they do not have their contract, they are nowhere close to being able to recontract in this market and be economic. And some of those projects just quite possibly could be done for good if those contracts come off and the contract price itself has not caught up. So I think those two things would make for a very good 2017 and would set us up for a tremendous 2018 as the market starts to get back on track.
Excellent. Well, David, I will let you go. Thank you so much for coming back on the program, and we look forward to having you down in Belize from February 15th until the 19th at our Palisade Hard Asset Investor Conference that we're throwing. Thanks, David.
Yeah, great. Thanks, Colin. Appreciate it.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?